Okay, we're going to talk a little bit today. This little section is going to be, we're going to be talking about the living markets, okay? And you got to understand that when we look at a chart, what we're looking at is a story, okay? In the same way you would pick up your favorite novel and you would read that story and understand what's happening. That's what we're doing when we open up the markets in the morning. We're taking a look and seeing what is happening, what is the story that this market is telling us. And based on what the market tells us, we make decisions. It's kind of a choose-your-own-adventure story, right? You get to choose what is the next step, what is the next thing that's happening here, and how am I going to respond to that? Okay? I've told you already that I've read just about everything I could possibly read about the markets. And Curtis can attest to the size of my trading library is full of junk, and it's full of treasure, and it's full of all kinds of stuff. But even though I've gone to the ends of the earth, and I've seen, the craziest things and read the most strange stuff you could possibly read about the markets, I always come back to the very simple basics of the markets, and that is how price forms. If you think about Wallace Wilder and the RSI, Wallace Wilder saw something in the market, and he created the RSI to help him find that little unique treasure over and over and over again. Keltner, same thing. He noticed something about the market, and he built the Keltner channel to help him find that little opportunity, that little golden nugget over and over and over again. John Bollinger, a friend of mine, John recognized a little nugget in the market, built the Bollinger Bands to help him identify a little nugget in the market and do it and see it over and over and over again. So all of these things that we like to gravitate to, all these indicators, all this new information that we like to use in our trading, all the newest systems and everything like that, it's all because there's something in the price action, something in that story that people recognize, and they want to find it over and over and over again. So what's the best thing that you could possibly do as a trader? Learn how to read, right? If we learn how to read, then everything starts to fall into place, and you can find why John Bollinger likes the second standard deviation off a 21-period moving average. Or you can understand why Wallace Wilder built that RSI to find where a market closed in relationship to its range and why that's important. You can understand what is the channel that Keltner was looking for to identify his trade setups. Do you see what I'm saying? And that is the first step of what we're going to do today, is we're going to really dive into the living markets, the living, breathing markets, and try and understand the very simple basic letters, punctuation, sentence structure of this market and how it works in a living, breathing market. So the first thing I want to do is I want to draw on the chart or on this little pad here a little candlestick. Okay. Now we know that's a bullish or a bearish candlestick? Yes, it is, right? Let's draw the bearish version so we know the difference. Okay, I am learning how to draw here this morning. Okay, we know that this right here is a bullish candle, right? And we know certain things about that candle. We know, where did it open? We know it opened right here, right? Is the open. Where did it close? Closed right here, right? And where's the highest point of that candle? So during whatever time frame this candle is measuring, we know that during that time frame, it reached as high as here, right? And during that time period, it reached as low as here, right? Okay, so already we have the basis for a knowledge, or for reading this particular bit of information. We know certain elements of that. And furthermore, overall, we say it's bullish. And why do we say it's bullish? Because it closed higher than it opened. Okay, that is the first part of the story. But is it the whole story? Why is it not the whole story? We don't know the details of this story yet, do we? We really don't know. All we can do is we're just taking a snapshot of that particular sentence. And how many sentences are taken out of context? Trust me, ask my wife how many sentences are taken out of context, right? She will tell you. I need to be a better communicator is what she'll tell you. So, is this really a bullish candle? And so what we need to do is we need to add clarity to this picture. And so how do we add clarity? We look for more information, right? More info. If you're looking at a picture, right? If you're zoomed way out on a picture, most chances are pretty good it's going to be fuzzy, right? Especially if you have eyes like me. It's going to look fuzzy. As you come into focus, as you come in closer, you get more detail, more clarity about that picture, right? If you get in too close, now you see things at the molecular level. You start to see each individual pixel and how all of those come together, little dots or little squares, and how those little squares form that picture. So what we're looking for is we're looking for a little bit of clarity in how this market works. Okay, so we know for certain, let's just draw this, see if I can draw some dotted lines here. Okay, so clarity-wise, we know that we opened up right here, right? But what we don't know is we think this is a bullish candle, but what we don't know is, did this market form like this? And close right there, right? That detail, all of that detail, all of this detail right here would form this candle right here. Everybody agree? Every corresponding point. We've got the high up here, we've got the low down here, we've got the open, and we've got the close, right? What is this sentence ending on? Is it a bullish end or a bearish end to this little sentence that we've now? A bullish end, right? So that confirms a price action that looks like that confirms the fact that this is, in fact, a bullish candle, right? Okay, now let's look at another way this could be formed. Let's say we start right here because we had to open right there, right? And what if we went like this? Now what do we see? Yeah, a very different sentence here, right? We see that the market went down, established this low point, rallied all the way up, established the high point, but what is the ending punctuation of this story? Bearish. Yeah, you see that, right? So what are we doing by dropping down into a lower time frame? What are we actually adding to our story? detail, clarity, right? We can see things in a much clearer picture, right? Now, which price pattern, A or B, would you want to trade a bullish position in? And would you still want to take that bullish position if you looked at the clarity of this and you see B? No. No. Why? Yeah, the next most likely move is a continuation down. Is that correct? Absolutely. Absolutely. So how important is it now that we, as we're reading the market, that we look at it in a different perspective? Very important, right? Even though most traders would look at this and say, oh, that's a bullish candle. I love bullish candles. I think I'll buy, right? Well, it may not be the right time to buy. I would definitely wait, if this were me, I would definitely wait for this market to pull back a little more and then catch the reversal before I got into that trade. Do you see? Okay. Now, what about confidence? Okay. Do we have enough information with this simple bullish candle to give us a confidence in the market, to really get into trades knowing that most likely this candle is going to continue? What do we look for confidence in the trade? There's a very famous saying, the trend is our friend, right? So what are we looking for to give us confidence? We're looking for more information, right? And as we look at the different time frames of the market, which candles are stronger, a 1-minute chart or a daily chart? Daily charts are a lot stronger. Would everybody agree with that? I would totally wholeheartedly agree with that, because you've seen how easy trends change on the 1-minute chart, right? You saw that this morning. We had several trend changes this morning. We went from, I can't remember, we were in a bearish trend in the beginning, moved into a bullish, turned into a bearish, and by the end of our trading session, we had a bullish trend. So we went through 4 different trend changes on the 1-minute chart. What was that like on the hourly chart? Do you anyone remember? One solid downtrend, right? So what do we look for to give us confidence in the movements? We look up into higher time frames. That gives us the bigger picture, right? Again, if we're looking at a particular picture and we're zoomed in so close, we can't see how all of those pixels form the picture, right? And so what do? We have to back up from that picture, and now we have the full panoramic view of what's happening there. Does that make sense? So what are we going to do to add confidence? We're going to back out into higher time frames. And let's just look at this, and let's just show that this is our 2 candles before this candle, right? And so now we want to add confidence. So we look at the longer time frame chart. And we see a nice march upwards. With this line right here, that line right there being the same line that's drawn right here. That high, the high of that candle right there, is also this candle, these 2 candles right here. Why? Because we're looking, there's going to be more candles on the lower time frame charts to form that candle. Does that make sense? So in this case, now, do we add confidence? Are we going to want to be trading the bearish side up here or the bullish? Which side of this market do we want to be trading? Bullish, right? We don't want to be taking bearish trades here because the confidence, our confidence in the market is what? Bullish. We're looking into higher time frame charts, stronger candles, and those stronger candles are telling us we ought to be bullish, right? So now, if we get this set up here, is it a higher probability trade or a lower probability trade? Higher probability trade because we have the confidence of the longer term trend, the higher time frame trend. Does that make sense? Okay. Placing a bearish trade right here. Higher probability or lower probability? Much lower probability, right? Because what is the likelihood of this thing turning at this point? Really good, right? So Jeff, you heard Jeff yesterday call patterns. I have all kinds of patterns. I've got black bourbon. I've got Johnny Walker. I've got, they're all named after liquors, by the way. But that's, it's not the name of the pattern that matters, right? It's you looking at the price action and saying, what? Does this make sense? Does it make sense to be doing what I'm doing right now? And to make sense of the market, we have to drop down into lower time frames to get clarity and higher time frames to get confidence, right? So that's what we're looking for, is to really get into understanding how price develops, okay? And the basic concepts of price action. The narrative behind price action is that we always have expansionary moves followed by what? Contractionary moves. So have you ever noticed how, stories, they kind of all boil down into these very few templates. Have you ever noticed that? There's your David versus Goliath story where you've got the under-abled person that goes up against the Goliath and he conquers and slays, the undersung hero, right? And then you've got these other types of stories where there's a discovery in the process, and that they discover this new great way of becoming powerful or whatever. Well, the market has these templates as well to it, and the templates in the market are very, very simple, okay? If you boil everything out of all the noise out of the markets, the very basic templates of the market are very simple. You've got expansion to contraction, to expansion, to contraction, to expansion, to contraction, okay? We haven't said anything about the direction in that, right? Expansion and contraction does not take into account direction. You can expand up or you can expand down. Contraction simply means that your movements are getting smaller, right? So when you get smaller movements, those lead to what? Expansions, okay? Think about that in life, okay? Anyone have kids? I got lots of kids, 8 kids at my house. That's a byproduct of being a trader from home. Warning, right? Trading from home comes with risk. I know at my house, because there is almost always there's almost always this constant noise coming, right? And I know that when that noise turns into something quiet, that something is wrong, right? I know that something is wrong. And that's when this little panic comes into my mind, and I think, okay, what are they destroying now? What is the devious little minds down there doing right now? And I go and check, and sure enough, inevitably, I open the door right in the middle of an expansion, right? Little boy's got his Superman cape on with no underwear, and he's doing a spread eagle off the top bunk. True story. And that's what we know about the markets as well. We know that those quiet periods, what's going on in your mind as you're saying, something's up. Something's up. I better go investigate. I need to know what's going to happen next because the storyline tells me that there is an expansion coming up next. And I gotta be there. I made a lot of mistakes in my trading today. You guys saw the mistakes that I made. But every mistake that I made was because I wanted to be where when what happened. I wanted to be in the market when the expansion happened. And if it didn't happen, I'm willing to take the loss, right? But when that expansion comes, I had better be on it because that's my only opportunity to make money in the market, right? Okay, now we expand the storyline out a little bit. We know the basic storyline is contraction, expansion, contraction, expansion. We expand the storyline out, and now we can add direction. And what do we know about direction? We got how many directions? 2. We've got bullish direction, and we've got bearish direction, right? Occasionally we can go sideways, but that's what kind of a market is that? Contraction, right? And we're not really interested in that. Does that make sense? So we've got 2 storylines. We've got the contraction, expansion storyline, and we've got the bullish move, and we've got the bearish move storyline. And we have to understand these 2 concepts to give our best guess as to which direction the market is going to be moving. Does that make sense? Once the market is moving like this, it's going to continue to move that direction until we get what? Before the resistance, expansion, contraction. We know that we're going to get this movement continue until we get some sort of a contraction in the market. Does that make sense? So buying at this point, if this pattern looks like this, buying at this point does not make any sense because we haven't had a contraction yet. The market will most likely continue in that direction, and that's how we set up our trades. It will continue that direction until we get a contraction. And how long do contractions have to be long and drawn out? No, contractions can happen pretty quick, right? If you think of a car driving down the road at 60 miles per hour, right? In order to turn that car completely around, you're going to have to contract the speed of that car. Does that make sense? And that speed can contract really quick, and they can get a fishtail turn, as you apply the brakes really fast and turn that wheel, and you get this nice big rubber mark on the road as it turns around. Or you can do it granny style, right? Where you go 60 miles per hour down to 50, down to 40, down to 30, down to 10, 20, down to 10, and then a 3-point turn, and then you get acceleration back into the other direction, right? So that's what we're looking for in those contractions, is we're looking for simply the market to slow down, okay? What we want to do now is we want to understand even more at the molecular level how this price action forms, okay? And so what we see in a typical setup is, let's look at a couple of bars coming up here. And let's look at just a really basic 3-candle reversal pattern. Okay, the 3-bar reversal candles happens in 1, 2, 3 bars. And we're constantly measuring the reversal based on the fact that the market forms a lower high and the market also forms a lower low. So the point where the market crosses the low point right here, that is what triggers, this is what triggers the 3-bar reversal. Okay, because you know that the minute that it crosses below that low, right there, you know that the minute it crosses below that low, now you've formed a lower low, right? Does that make sense? Just pure mechanics. Okay, you cross the low, now inevitably you've formed a lower low, whether it stops here, whether it stops here, whether it stops here, or even way down there. The minute that you cross that low, you've formed the 3-bar reversal pattern. So what is it that causes this pattern to form? Because if you understand what causes the pattern to form, now you know how to utilize it, how to trade it. Does that make sense? Okay, share that with the 3 of you. And I need 3 sellers. If you can share that with one another. Okay, I need a 1 lot order, a 5 lot order, and 100 or 1,000 lot order. So pick which one you want to be. On the front. On the front. So you're a 5. You're try a 1. You be a 1. Just a 1. A 1? Yeah, just a 1. Okay, and you're 5,000 or 1,000. Okay, and the same over here. We need a 1, a 5, and a 1,000 contract order. Okay, now everybody hold up your signs, okay? Now you guys are traders in the market. You guys are at your homes, you're sitting in front of your computers, and you are placing trades, okay? We need to line this up the way that it would line up in a normal market condition, okay? So are we lined up exactly quite right? Line this up the right way. Oh, you know what? Let's put price on there, sorry. Got a little ahead of myself. You put 1 point, I wrote all these out so that I wouldn't have to think. Okay, you put 1.2610. You put 1.2611. You put 1.2612. You put 1.2608. 2608. You put 1.2607. And you are 1.2606. Okay, now let's cap that. Okay, now we need to make sure that we have everyone lined up correctly here. Is this what your typical trading playbook would look like? Or not your playbook, your trading book, your order book? Would they be lined up quite like this? Let's line up. Here, maybe you guys can scoot down so you're all in a line. Maybe that'll make it a little easier. Okay, Okay, so let's move things around. Okay, perfect. That's perfect, right? We've got the lining up from down here is 06, 07, 08, 10, 11, 12, right? Is that right? Okay. Now, if this is 1.30, let's look at it this way. Do we have the buyers on the right side and the sellers on the right side? Yeah, I think we have the buyers and the sellers on the right side, right? If we were to, what we're going to do is we're going to turn this whole thing into price action, okay? So we're just going to flip each other up, stack them up on top of each other. We're going to have this guy on the base. We're going to have you on top of his shoulders and you on top of his shoulders, you on top of that, you, and you're the lovely cheerleader on the top going like this, right? Are we ready? No, just kidding. All right, I think we're pretty good in how we've got this lined up, okay? Now, what type of orders are these? What are these guys doing? What are you saying you want to do? I want to sell one contract at 126.10. What are you saying, Leo? It's Leo, right? No, Gennaro.
I want to buy one contract for 1.2608.
At 1.2608, right? So we've got, is that a market order or a limit order or a stop order? Those are limit orders, right? Explain.
What's the price?
What's that?
What's the actual price?
What's the price now?
The current price would be 1.2609. Let's just say it's right in the middle, right? So these are limit orders. He's saying, I want to buy, but I only want to buy at 1.2608 or better. Does that make sense? And you're saying, I want to sell, but I only want to get 1.2610 or better, right? Your better is this direction. Your better is this direction. Does that make sense? Now, if we have one of you guys that are sitting at home, you guys are at home, and you just want to buy. You don't care what price. You want to set a market order, and you want to buy. What happens? Who do you match up with? The one guy who's selling, right? So your order to come into the market, you're saying, I don't care what price I pay. I just want the next trade, and I want the next. I just want the stock or the currency, right? So your one order is going to be matched up with this contract. Does that make sense? Wouldn't you rather buy at 2.608?
Nobody's selling at that price.
Nobody's selling it. You want the stock or you want the currency more than you want the price. If you place a market order, that's what you're saying, right? I want this currency more than I want to get it at a good price. I want to own it, okay? And so that's why your order at home is going to be matched up with the one person who is getting ready to sell it right now at this price, okay? Let's say you want to buy, we need one more person here. You want to buy now, but you don't want to pay the market price. Where do you put your order? You want the stuff, you want the currency, and you want it now, but you're not willing to pay the 1.2610 price point. What can you do? A pending order. What type? a buy, a pending buy, which is a limit. You want to do a limit order, right? Right, exactly. Okay, so we need one more volunteer here. There we go. Okay, so we want to buy one contract. Now pick a price that you want to buy it at.
Price. Man, that's a good one.
Do you want to buy high up in here?
Yeah. 126.11.
126.11. Okay, so if we go 126.11, if we take that and go put yourself at the 11 mark, does that make sense? What's going to happen? Whoa, you're right. What's going to happen? He's saying, I want this price, or which direction? Better, that way, right? And so he goes to put this limit order in, and immediately what happens? He gets the better price. Do you see? And so both of these come out of the market. Does that make sense? Okay. So now you keep that. Now what happens if he puts this in at 1.2609? 1.2609. Now where does he land in the stack here? He moves over, right? So now he's right there. And what did he do to this trader? Have you guys ever seen what happens at the water fountain line in a kindergarten? What's always happening at the water line in a kindergarten? Everybody's cutting in line, right? They don't understand. So what did he just do? He cut in line, right? He wedged himself right in between the guy that's selling here and this guy that's buying here. Does that make sense? So if he really wants to buy this, is it better that he positions himself here or here or here? If he really wants to buy it, he wants to get right in front of the line. He wants to put himself right in front of the line. Does that make sense? Okay. What happens now if he says, well, the current bid is 08, so I want it at 08. Is he in the right spot?
No. Yeah.
First in, right? He didn't place the trade first, and so he goes into the back of the line now. So if you want to get into a trade first, what do you have to do? You have to sacrifice a little bit of what? Price or time, right? You have to give up a little bit of time. So the market is always taking those trades that are on the, if there's two trades that are being traded at the exact same price, you're all stacked up in line, okay? Now this is important because sometimes traders want to get cut in line. They want to be like the kindergarten water line, right? They want to cut in line. They want to get in front of the person. So the strategy there is to change your bid to 1.281. What did that do for this guy? Do you see this little battle that goes on now inside the trading? This is what's really happening when we look at this price action. We're watching this battle happen between all of these guys that are putting in limit orders in the market.
Is that the reason why you carried the trade earlier? So when the rally happened?
I'll show you that here in just a minute. We're building up to that point, okay? Okay, now let's say that we have the current market price, let's say that we have two people that want to sell. We want to sell. Only now we want to sell. Let's say we want to sell 4 contracts in the market at market. I need someone else to come up and work this order for me. I need a good runner on the floor. Oh, here we go. Okay, so you want to sell 4 contracts. Whose contracts are you going to take? You want to sell 4 at market. So you got to find, first of all, you've got to find sellers or buyers. Opposites attract, hint, hint. Okay, so you're going to take this one, right, out of the market. Okay. You're going to take that one out of the market, so you guys can go sit down. What's happened to price exactly? What's
Market.
It's at market. Sorry. So you've now gotten 2 out of the market, and you have a leftover 2 more of his, right? So now you've gone from how many? 5 to 3. Hold that real solid there. 3. Okay, and are you done?
I'm done.
Yeah, you don't have a limit order, so you don't get to stay up here, right? Okay, what happened to price? Price went from 1.2609, and what is the current price? It went down 2.608, 2.607, right? So if we draw that out here, we went from 1.2609 to 1.2608, and we are now at 1.2607, right? So our candle started here, dropped down like this. Is it filled in or is it white? Filled in, right? So we saw this happen just right now in the market, okay? Now we have a new, where's my, oh, there we are. Now we have a buyer that steps into the market. I need a real strong buyer here. You're not, what, where you go? Hey, he was my strong buyer. You're it, okay.
Real knowledgeable on this one. If you guide me, I'll be
You're awesome. You're
Okay.
going to be just fine.
It's all his fault.
She is the strongest buyer we have seen yet. 50 contracts. Okay, so which direction are we going?
Market, she's buying.
So-
Market.
So I'm gonna
Okay, she takes him out, takes 5 out here, and what happens now? 900 what? 994. Okay, now you've got your 50 contracts, right? So do you stay up here? Do you have a limit order? Nope, you got a market order. So you got all 50 contracts, so you're done.
All right, that was easy.
And this order now turned into 9 what? 54? All right, so what happened to our price bar here?
Goes up to 612.
10, 11, 12, right? So the next candle, boom, just like that. You see? So now we have what kind of a candle is that? A bullish, a very bullish candle, right? And it moved very quick. Okay? So, yes?
The next candle, wouldn't it start up to where we were selling?
Oh, technically, yes. Yes, absolutely. It would trade, it would close up at the, it was at 10, right? The next bid. So actually, this would be all gone here. Okay, so we were down at 1.2607, right? But the actual next trade didn't happen until we were back up at 10. So this part, not there. And what you have is a bullish candle, but it's not as big. But you can see how it moved. Okay, what was that price action? Was that fast price action? That was very fast, right? One order into the market, moved it all the way up from 07 all the way back up to 12, right? Okay, now we've got some more market orders coming in because that just triggered a lot of bullish action in the market, right? So I need, let's go three more buyers. Three more guys, come on. Three more, come on up. Just jump up here. There you go, Hector. So let's go 10 contracts, 5 contracts, and 20 contracts. All of these are at market. Two more buyers. There we go. And Chad. Okay, so Hector, you're first. He gets 20, right? Right? Is that right?
Yeah.
20. So this drops down to 34. And Hector, how long do you get to stay up here? That's it, right? You got your order. You got your order, so you go sit down. 5, so that drops this down to
Show us back here what you got.
29.
Yeah.
Market.
5 down to 29, so he's done. Chad is another what?
0.
10.
So now she's down to 919. And what happened now, okay, we were fast price action. It was fast right here. And now what happened? We've gone 3 orders that way without changing the price one bit. What is that? You guys are great. That's awesome. Consolidation, right? So now, because we see that consolidation start to form in the market, now what's going to happen? Yeah, we have to break through 900 lots in order to what? To break which direction? To expand up, we have to break through 900 contracts. That is one big asked trade. Ask. You guys, come on. That was a big ask trade, right? Don't tell my kids. All right. How hard is it going to be to get through the big trade here? It's going to be hard, right? So what's most likely going to happen? Okay, first of all, What do you think is happening over here? Right now we don't have anyone in here, but what's filling up in between here? Most likely.
Buys.
Buy orders, right? A bunch of limit orders. They're saying if I can buy it, if I could just buy it a little bit cheaper than where it's going right now, I'll be happy, right? A lot of people are saying that. That is the wrong way to think, right? Why in the world would you be filling in this area right in here with buy orders? To recoup losses, maybe. Yeah, but that's an emotional thing, right? So, but this is where people lose, is because they see the prices sitting right here, and what do they think? The market is going to go through that, right? And they're thinking, well, if I can buy it just at 26.11, if I can just jump right in here in this line, then now all of a sudden I've got a better price than what it's currently trading at, right? But do I have anywhere near the market, the bank account, to go up against that? No. Do you know what that order is on the books? Can you see that order? So why would you place an order here to buy? Does not make any sense, does it? You guys are starting to see that, but yet, trust me, how many of you have done that? You think, oh, it stopped. It's going to go break through that. I'm going to go ahead and buy it cheaper now. And then what inevitably happens? You're jumping in, and all of a sudden you get one of these orders. Let me draw these out real quick. 1 point. I need 3 more. Here we go, Hector. Okay, even though I know I shamed the buyers at this price, but there's 3. So go line yourselves up where you think you ought to go. It's 1, sorry. Make it bigger. Okay, are they lined up correct? He just came in at 1.2607, so where is he? You're behind. Yep, you guys switched spots because you were in line first, right? I was. That's right. So he's got to come in behind you, right? Okay, so now we're all lined up, okay? How thick is this? How thick are these orders? Pretty thin, right? Even though I'm gonna embarrass you for a second, but don't take it personally. Even though he's sitting here with 1 order and thinking he's going to get a better price than 1.2612, how easy is it going to be to take him out? Pretty easy, right? So let's come in now with a Let's come in with a 15 contract order, sell order at market. I need a, there we go. Okay, now we got a 15 contract. Is 15 contracts a big order? 15 contracts is not a big order in the market, right? Not when you've got 1,000 contract orders, right? Okay, so he just took out all of those traders and what?
I'll take you all on.
And do you have any left over?
Just took 3 of these.
10? You have 10 left?
No, I got
15. 5 left. So you're now
95.
and you're done, right? Market orders don't get to stand up here. Okay, so now what happened? what just happened to the trade, right? What did we have? We had a consolidation right here, right? And then what? What follows consolidations?
Expansion.
We had an expansion to the
Downside.
downside, right? A bearish expansion. So we saw the market go. Now we started at 2609, is that right? 26, I'm going to mess that up here. And we're now at 06. You see that? We had what you've seen in how the markets are, how these things are trading, is you've seen why the consolidation forms, right? And you've also seen now why expansions occur. Expansions occur because you have a very thin trading blotter in between two big supports and resistance levels, okay? Now, what's going to happen as the market drops back down? What's going to happen here? We're going to push against this for a few trades, right? And what's going to happen to the price? Consolidation, right? As we push up against this and we knock this down to even 95 trades. That was very nice, wasn't it? So we just pounded on this wall over here, pounded, and we still haven't gotten through that wall, right? You know there's a wall there because of the consolidation. You know that it's difficult to get through that because of what? How much time has been spent here? Do you follow that? Okay. Now, how easy is it going to bounce back up over here? How easy is it going to be expand to this direction?
It's still the larger wall there. So
But to get here is going to be really simple, right? Yeah. Right. So again, you can see how. Let me draw these up, and you guys stay up there one more time for one more little deal here. Okay, we would have seen the market go like this. Then we saw a key reversal. And then we saw this. 3 orders up there, right? This is at 1.2612. We saw the market hit that 3 times in a row if we were just tracking every trade. And then we saw an expansion. And this is now 1.2606, right? And now what have we seen at this level? We've seen bang, 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 all the way down to 96, right? So now, understanding how the lines are formed, now can you start to see why I place the type of orders that I place? Okay? If I want to take advantage of us breaking down this trader over here, completely breaking him down, do I want to be a market? Do I want to be sitting here? He's buying, right? I'm selling, right? Do I want to be selling right here? Or do I want to be selling right here? Right there. Why? Because there's only 95 orders left, 94 contracts left at this price, right? And how long has that consolidation been there? Quite a while, right? And so when we break through that, what is most likely on this side of this wall? Another fast trading movement, right? Until we find the next wall, which would be the wall, until we find this point right here. Does that make sense? You guys are awesome. Thanks for your support. Thank you.
Souvenir.
Yes. Guys, can you see it? Isn't it beautiful? I mean, really, it's beautiful. It makes me so happy. You guys can see how these things form. You can understand. If you know how to read the story of the market, if you know how to read this, how hard is trading, really? Kindergartners can do it because they know how to cut in line, right? And that's what we want to do, is we want to learn how to position ourselves. We know you guys have visually experienced expansions, right? 2 very big expansions you've witnessed. You witnessed also 2 very big contractions in the market, right? You experienced it here and you experienced it there. You know how to use these orders to put you in place so that you can catch that expansion. We didn't talk about it, but you could have easily positioned yourself right next to this this order right here, the big A trade. You could have put yourself right here and caught the expansion down, right? Provided there was enough room to make, 2 or 3 pips in there. Do you see what I'm saying? So do you really need all of these big indicators and stuff to help you learn what the market is? No, you don't know what those orders are out there, but you can assume different things about the market, and you can position yourself based on what those assumptions are, okay? Those 3 concepts that you've learned today, the confidence and the clarity, will give you a better understanding of what's built into this market. The second concept of the expansions and the contractions will help you know when to get into the market. And the direction, well, that's pretty easy, right? You know how to position yourself to catch whatever direction you know. And folks, really, trading's that easy. We make it very complicated on ourselves, but once we understand that this is a living, breathing story, and we have to understand what that story is, trading becomes very simple. I am done. Let's have some lunch. Remember, why are we eating pizza today? Because I took my money out of the market, and what has that created? A positive what? A positive lunch. A positive feedback loop, right? When you guys eat this pizza, you guys will be reinforced positively that we did a good trade today, right? And forever and ever and ever, you'll remember that day that Shawn Lucas traded and he won, and because he won, we got pizza today. There we go. You guys are awesome.